All right. Hey, everybody. I am Jer. It's nice to meet you if we haven't met before. I hope you're having a great day. There's more bad news for both DoorDash and GRUB or Just Eat Takeaway. Apparently, the EU, European Union, is working towards making it to where gig workers, which are drivers for DoorDash and Just Eat Takeaway, GRUB, are going to, what's being said is that they're probably going to become required to hire these gig workers, these drivers, instead of them being gig workers and contractors and just working at will. They will have to become employees. This is kind of bad, in my opinion, for both. We're going to go ahead and read the article. There's an article that came out earlier about it. Let me pull this up here. Bam. All right. Gig economy stocks plunge amid EU regulatory crackdown fears. London. Speculation that the European Commission is set to propose stricter labor rules to regulate the gig economy have sent shares of the companies in this sector sharply lower again on Monday, building on losses from last week. Now then, this isn't going to include, they're not going to talk about DoorDash in here. However, DoorDash just recently bought Wolt. Wolt is a part of, it operates in Europe, and so it's going to affect DoorDash. Investors fear that the business model of these companies might be jeopardized should the EU executive arm require them to directly employ drivers and riders. The reason why this is going to affect these companies and investors in these companies is because it costs more when you have to employ these drivers, because these drivers might have downtime where they're not doing deliveries and they're still getting paid. Then on top of that, you also will have to be required to offer benefits. Who knows what those benefits might be, but it's really anything and up to the European Commission. So it could be very, very expensive for DoorDash and for GRUB Just Eat Takeaway. This is on top of both of these companies already kind of struggling to make a profit. DoorDash loses like $100 million a quarter. This is going to add to those losses. This is insane. Like, it's going to be like tough for this to work out in the favor of these companies and their investors. Let's just continue. The thorny question on whether or not delivery drivers are employees is about to be answered by EU Commission later this week, and reports suggest the answer will be yes, commented Danny Houston, a financial analyst at AJ Bell. For food delivery businesses like Deliveroo and Just Eat Takeaway, that could mean a huge spike in cost, which many expect will be passed on to consumers across Central Europe, she added. So whenever they have more expenses, obviously they're going to have to pass that on to customers, and customers will be less likely to use those services because they don't want to spend extra on these delivery fees most times. Maybe they might, but I kind of doubt it. At 10:56 GMT, shares in Deliveroo, Just Eat Takeaway, Delivery Hero were down 6.3%, 5.5%, and 4.5% respectively, having all also suffered double-digit losses last week. I expect this to flow into DoorDash, who just recently purchased Wolt, so that they could enter into markets overseas, some of which are in Europe. The regulatory uncertainty about gig economy stocks was illustrated last March when a number of investment funds declined to participate in Deliveroo's initial public offering, adding pressure to the stock, which plunged when it made its London debut. Sarah Streeter, Senior Investment and Markets Analyst at Hargreaves Lansdowne, said other factors are also weighing on tech stocks, such as expectations of rising interest rates, which would typically make them financially less attractive for investors. Expectations that the restaurant trade won't be dented so much by the new variant as first thought is likely to have weighed further. She also said, noting food delivery companies had seen their business and stock valuations increase during the pandemic. Okay, so let me go back here. All right. This is not great news for companies that do delivery in Europe, that do food delivery, that do any delivery, any kind of gig work delivery of products, of food, of people, driving services like Uber and others who transport people. Those people will be switched from being gig workers to being employees. And again, those fees are going to get passed on to customers. It's the only way to do it. I mean, unless you're just become a nonprofit, basically, because you're going to lose even more money. So they're going to take those fees and add them on to, send them on to customers. I would not want to be an investor in Grubhub or Just Eat Takeaway or even in DoorDash, knowing this is coming. If only there was a way that they could grow their market here in the U.S. and enter into new verticals. I wish I knew something. I wish I knew some way that they could enter into new areas of business that aren't just food delivery and that aren't in the UK and are in markets here in the US that maybe they struggle in, maybe they haven't entered in yet. You know, maybe like small and mid-sized cities. I don't know. I wish I could think of something that could help either one of DoorDash or Grubhub grow their business to be more profitable. Even with this news about the Europe Commission thinking about making it more expensive to deliver food. I don't know. I don't know what they could do. I don't know. Hopefully they figure it out, though. And they figure it out soon before this takes a big hit to their business and their stock price. Don't know. Anyway, I just wanted to do a video real quick to pass along that kind of bad news. Hopefully you have a great day. Hopefully you're looking at this, you're not an investor in either one of these companies, because it's going to probably take a hit even further now, on top of the fact that people are ordering delivery less because of the pandemic kind of coming to a close, kind of winding down. So, all right, love you all, and I will see you very soon. Bye.